thank you for joining us today for our webinar, Harnessing Programmatic to Drive Profitability for Financial Brands. My name is Arda, and I'm part of the marketing team here at StackAdapt. Before getting started, we have some housekeeping items to cover, and then we can get the webinar underway. We are happy to field any questions you might have on any of the content. Please feel free to place them in the questions area of the GoToWebinar panel. We'll address all questions at the end of our session during the Q&A. If there are any questions we are not able to address in the allotted time, we'll follow up directly after the webinar. Just a quick note, this webinar is being recorded and will be shared shortly after we end. Just a quick note about StackAdapt. StackAdapt is a self-serve programmatic advertising platform used by the most exceptional digital marketers. The state-of-the-art platform is where some of the most progressive work in machine learning meets cutting-edge user experience. That said, I would like to hand over to our presenters.
Thanks, Arda. So my name is Megan Wall. I work as a sales manager here at StackAdapt, and I've been here since August last year.
And I'm Chris Wilson. I'm an account manager at StackAdapt, and I joined in February last year. Taking a look at the agenda today, we'll start off by going through trends on the rise for the financial industry, before taking you through a financial customer profile, looking at some recommended targeting strategies that work well for finance clients, then some recommended channels that align to those strategies, how to stay compliant and the importance of that, before finally wrapping up and going through the Q&A. So I know we already mentioned it, but if you have any questions that come up at all during the presentations, please just put them in the question box on the panel there. Yes, so starting off with trends on the rise for the financial industry, I'll give you a couple of moments just to read that quote there. Yeah, so essentially what this is trying to convey is as people are realizing that neobanks are convenient and that they don't actually need to go into physical banks like they thought they used to. So because of that, they are choosing to take the savings option, as neobanks and other digital financial services tend to be a bit cheaper than the traditional channels. So as we're in the midst of an economic downturn, that's why we are seeing that trend on the rise. Moving on now, we'll look at some trends of the year that we have noticed. So starting off with consumer protection being at the forefront. So there are some specific measures that banks and financial institutions will need to take, such as clearly detailing policies. So transparency essentially, and us in media and advertising can definitely relate to that. Ending miscellaneous fees and charges is quite a large one, which also does relate to transparency, and making it easier for customers to cancel and switch services. Looking at UK consumers' shift to both digital wallets and buy now, pay later, such as Klarna. So consumers place a high value on fast transactions. So when it comes to payment methods, they value two things, and that's speed and security. Anyone who's used any neobanks or any digital platforms at all, you'll probably realize that it's virtually instantaneous using those for both incoming and outgoing payments. Increased online activity, though, has led to increased concern. So people who were more inclined to use traditional banking methods, switching to the digital services. It makes sense that concern has increased as a result, and identity theft is the top concern, naturally and unsurprisingly. Personally, I was actually hesitant to switch to digital banking, and was even skeptical of using things like GPay, but I honestly personally haven't been into a physical bank since 2017 now, so I do agree that is the way forward. And then open banking. So with consent, open banking helps brands recommend more relevant products and services to individual users. And we look at the importance for the consumer to receive relevant recommendation for banks, and that's covered a lot in the next section as I move over to Megan.
Thanks, Chris. So let's take a look at the financial customer profiles to tee up the types of personas that we're looking to target for financially focused advertising campaigns. So when we look at financial products people were utilising most in the UK last year in 2022, unsurprisingly, the number one was current accounts. But there is a real diversification as we look further down the graph towards credit cards, mortgages, loans, right through to crypto and precious metals. When we factor in that some of the main reasons for UK customers switching banks are quality of advice, security of assets, and the range of financial products available to them, it's clear to see that we should have some diversification within our marketing campaigns to ensure that the customers are aware of all business facets that they can tap into with their current or their future banks. So while trust was ranked as the most important factor in the UK, financial advice hasn't ranked as highly despite gaining importance so far this year. 42% of customers worried that a market downturn would negatively impact both their bank and their savings, meaning that the high quality of advice and a sense of trust is imperative when it comes to retaining customers. So we've all seen banks move to a digital landscape over the past years, and it does seem that that trend is likely to continue, with 69% of users now wishing to bank through their mobile or their tablet. It's evident that this shift is what's demanding the importance of digital service as well as customer service. So in-person banking has not dropped year on year, but it has remained stagnant at just 28%. It's still important to ensure that even the old-fashioned approach is still high quality. And telephone banking is on the rise, which I was surprised by, but it does still make up the lowest percentage of total banking in 2023. Mobile banking makes up 69% of overall banking, as we've already seen. And when we look under the bonnet of this, it's made up of the retail banking app, retail banking websites, and credit card mobile apps. So to ensure customer retention and overall satisfaction, it is imperative that the customer feels secure about making a transaction, can conveniently access the service or support that they're requiring, and are also easily able to log in and out of the account in a secure way. Pivoting now to what specific customers need from the market. So we've got 4 groups here: on the margins, overstretched, aspiring, and asset rich. So on the margins, these customers tend to be younger and many are renting their homes. A large minority don't have any qualifications, and long-term health problems and digital exclusion are also comparatively common. Many are on the margins of financial services. The overstretched consumer, many of them are in their family years with an average age of 25 to 55, and they're typically employed. So these consumers have unsecured borrowing, but little or no financial buffer. Making ends meet can sometimes be a challenge for the overstretched consumer. The aspiring consumer in this segment typically have medium to high incomes. However, they do owe unsecured borrowing. Most have a mortgage. Again, they tend to be between the ages of 25 to 54 and living in couples. Of all of the segments, these consumers consider themselves the most savvy. And then lastly, the asset-rich consumer. So this is the largest segment. These consumers are reasonably comfortable day to day. They're most likely to be in a couple with no children, and 35% are retired. So they don't have an obvious need to borrow, as they do have the highest level of savings, and just over half own their homes outright. So with those consumers in mind, let's jump into the customer journey. So the 5 stages of the customer journey, as you can see here, are awareness, interest, consideration, purchase, and loyalty. The awareness stage covers ensuring the brand is visible and clear to the consumer. The interest stage then is letting the consumer know that there is a specific product or service that they could utilize or benefit from. Consideration covers why they should consider taking the leap or why they should stick with the bank that they're already using. Purchase is signing up to a product or service, so whether that's a current account or a mortgage or any of the other products on offer. And lastly, loyalty. So this can only be achieved through high levels of customer service, digital service, trust, and advice. Financial clients tend to take longer to convert, but the life cycle and the opportunities that they provide are more significant. So timelines should include the steps taken by a customer and how long each step takes. This can help you identify any areas where customers might get stuck or frustrated and potential bottlenecks in delays or service. So what we should always focus on with the customer journey map are segmenting client profiles. So this could be demographics, interests, preferences, and demands. The channels that these profiles are more likely to spend time on. The timelines for each part of the customer journey, which again differs per persona. The various touch points where they may interact with the brand. The emotions that we'll need to connect with in order to build trust with the user. And then the data that we can read in order to learn from each conversion and adapt the strategies as necessary. A good customer journey means providing customer support and resources, regular communication, offering promotions or incentives, and connecting customers to other services that they may be interested in. So the current sentiment is that customers and potential customers do not appreciate a generic approach. So they want a tailored experience and are happy to part with their data if that can be facilitated. 63% of consumers say that they will share their data and see it as a benefit if they can get increased security and convenience from doing so. This is up 12% from last year. And 81% of customers say that a positive online experience increases brand loyalty and trust, and this aligns with the increase in the need for digital service as we saw earlier in the presentation. So as per the previous slide, if a brand markets only generic materials without any consideration for the different personas and their requirements, it's unlikely to resonate as strongly as those which tailor a more personalized approach. Personalization can reveal how much a brand cares about its customers. It's about offering impeccable services to a consumer hinged on personal experiences. By putting personalization at the center of their business models, it enables a brand to successfully scale it to achieve significant performance gains. Personalization allows you to develop customer loyalty, boost attention, and increase retention. I'm now going to pass over to Chris to discuss targeting strategies.
Brilliant. So here what we can do is utilize existing customer/CRM lists to reach users with specific messages and even looking for specific outcomes from these lists. So to be a bit more specific, we can leverage different lists or segments such as existing customers for banks, high spending customers, or even lapsed users or people who haven't deposited in a while. So what we can do is use our Creative Studio team, and they are able to build ads focused towards each segment. Using lapsed users as an example, we can create a message focused towards bringing them back and winning that business once again. So essentially, once uploaded using our LiveRamp integration, the segments are hashed just to ensure data safety and privacy is met. But it is also worth mentioning, due to GDPR regulations, scale can be limited for this format in the UK and EMEA. So it's best to be part of just an overall strategy instead of the only approach you take for a campaign. And so essentially this would be classified as lower funnel or as part of the decision-making process on the customer journey. And so moving on now, we'll look at third-party data. So we have partnerships with all the major third-party audience providers. So this utilizes our library of over 350,000 segments to reach users based on things such as interests and behavioral characteristics. So things like credit score, income, age, and the like. And as you can see from the graphic on the left of the slide here, we work with the likes of Equifax, Axiom, Nielsen, and IOTA, just to name a few. But yeah, so these are just some vague examples. If you have any specific questions around our capabilities there, of course, just put them in the questions box and we can answer them after the presentation. But moving on now, we'll also have a look at account-based marketing or ABM targeting. So this targets users for specific companies using our integration with Bombora. So we can look at either something more broad as job functions, or even get as specific as exact job titles, just to ensure we're reaching the right people for your campaign. So this is obviously more suited to B2B. And so like with first-party CRM audiences, those scale is limited. So this is highly relevant in terms of the people you are trying to reach, but it is best to also just be a part of an overall strategy. Moving on now, we'll take a look at location targeting. So kind of like it says on the tin, you can use this for a range of approaches and different levels of specificity. For example, target people when they are within a set radius of a branch, target people during and after their visit to a branch, and combine with timely offers and relevant creative messages based on where they have been. So you can look at, like I said before, specific banks or branches, or you can look a bit broader and target financial hubs such as Canary Wharf in London as an example. Moving on now, we'll have a look at our custom segments. So this is StackAdapt proprietary custom segments, and these reach people that are relevant as possible. So these are fully customizable solutions. They're fully flexible because they are owned and operated by StackAdapt. We can continually tweak them even after a campaign has launched and is live. They are cost effective because we own and operate them. There is no data loading fee on top of those, so we can typically get greater reach out of those audience segments. And if I'll start looking at some examples of the options we have here. So point A is an example of a browsing segment. So we can create segments based on people consuming content related to such things as opening a new account, or you can look at competitor conquesting by targeting those who are consuming content about competitor banks. Point B does link back to the previous slide around location targeting. And then to skip down to point F, what we can essentially do is create an intersection audience, which combine two audiences to maximize relevancy. And the graph on the right there illustrates this perfectly. So essentially you're taking users who are consuming that content and have also been to a branch. So there isn't as much scale as each of those individually, but you combine them together to just really drive home and reach a extremely relevant audience. So that's just a few examples, but let me know again in the question box if you want me to touch on any of those that I haven't given an example for after the presentation. So moving on now, we'll look at page context AI. So this is another one of StackAdapt's owned and operated audience targeting solutions. So this is a cookieless solution. So for once the cookies do depreciate, we'll be able to make sure we are serviceable in that area. And then these are real time, so slightly different to the browsing example I used in the previous slide. Because that it does maximize relevancy. So you are reaching people consuming content in real time. And so because of that, there is typically a general lower engagement compared to some of the custom solutions on the previous slide, because people are quite highly engrossed in what they are reading. But we typically then see a stronger on-site action compared to that of the browsing solutions. And that even is comparable to retargeting audiences at times. So yeah, to kind of summarize, not as high of engagement, but those who do click through typically then are more likely to convert on a website. And for any brand or campaign that's focused on conversions, we do recommend 2 or more PCAI solutions or strategies per campaign. But that's all I have for our targeting options today, and I'll pass you now back to Megan.
Thanks, Chris. So let's look through the recommended channels. So starting with native ads are a great paid content distribution channel. So for your blog articles and longer form content, native ads are consumed in the same way that people view editorial content, which could attribute to consumers looking at native ads 53% more frequently than display ads, and why they also tend to register higher lift in purchase intent and brand affinity than display ads. So according to TripleLift, native ads drive 3 times higher brand awareness and purchase intent, 250% higher ad engagement, and lead to conversions that drive a 475% return on ad spend. The goal or goals that are chosen will help craft creative, execution, targeting, and measurement. Display remains an essential component in many advertiser toolkits. It's still the richest tactic to learn about your customers and collect information that helps you communicate most effectively. The best practices for display are be compelling, be intriguing, be relevant, and be enticing. Some examples of how to make your ads stand out are on display on this slide. You can use carousel HTML5 ads to highlight the benefits clients can expect from your products or solutions, problems that you can solve for them, or package solutions that you offer. Each item can then click out to different landing pages, making it easy to start moving users down the funnel. Leverage interactive display to highlight the products your business creates. Video is great for keeping your brand center stage and showing how your values align with the audiences. The initial frames of an ad should be well branded and engaging, there we go, to capture consumers' attention and still have an impact if closed or skipped. To ensure value is maximized for video ads, StackAdapt connects your message with the most relevant audience, continually optimizing to drive a successful cost per completed view and performance for your campaigns. So with connected TV, so when compared to small mobile or laptop screens, a CTV ad is more immersive and relaxed and typically delivers significantly higher completion rates than desktop, laptop, or mobile viewing. An excerpt from the drum says, put yourself in the shoes of the average viewer. You've had a long, busy day at work and you're relaxing at home in a darkened room watching TV. Do you want to enjoy an ad experience that informs and entertains? You bet. At the end of the day, TV informs consumers while offering entertainment and fun, so why not create an ad that does the same thing? By combining multiple channels for the same advertising campaign, you can gain a greater reach by capturing people who are only on some of the channels. Each channel can be seen as a means of hitting a specific KPI. So video is great for telling complex or emotional stories, making it perfect for certain types of brand building. Native is amazing for selling products with an interesting educational and entertaining story, while display is more of a workhorse, so use it to lift the performance of the other channels. By using a variety of channels, you can facilitate more user touchpoints, which leads to more awareness, trust, and ultimately conversions and retention. So I'll now pass back to Chris, who will take us through some compliance.
Brilliant, thank you, Megan. So yeah, what we'll look at is what you need to be aware of in terms of being compliant within the financial sector. So essentially, first thing to note, this is something that both our client services and platform quality teams will always advise on for each specific brand on a case-by-case basis as part of the onboarding process. So this is nothing you'll need to actually tackle without any guidance or necessarily work out for yourselves. But some four key points is just be aware of the laws, as they obviously do vary by country to country. Then to keep up to date with those laws as they do change. Then know the types of content that can be used for financial institutions, and this is also something that our creative solutions team are happy to advise on as well. And then finally, use the right partners who specialize in finance and compliance. Moving on now, we'll look at how to remain compliant. So linking into that last point on the previous slide is creative tactics. So ensure that the correct message is shared in the correct place. And a key example of this in the financial sector is using the right terms and conditions in the right countries. Using third-party data, so leverage the correct third-party data to ensure compliance is met, such as reaching people of the correct age. Seems a bit obvious, but just need to make sure that's always correct. And then finally, quality checks. So this is something that StackAdapt does by default, as I kind of outlined on the previous slide as well. And it's actually required before launching any campaigns, just to ensure everything is above board. So this will always be handled prior to launch through StackAdapt. But yeah, finally, I guess we'll move onto our wrap up. And so a few things to really drive home is, partner with a programmatic platform that can handle new demand. So staying compliant in order to achieve your goals, tackling multi-channel approaches, so not just sticking to one approach, and then maximize awareness and performance by taking that full multi-channel and full funnel approach for your campaigns. Moving on, finally, it's just three key points we really want to drive home, I guess, is don't just know the trends, but get ahead of the upcoming and anticipated changes. Leverage the power of multi-channel, which I know we have mentioned multiple times, but yeah, tackling the full marketing funnel of awareness, consideration, and action. And then scale. So I know I mentioned a lot in our targeting solutions, but as well as a full funnel marketing, a multi-channel approach, it's also best practice to have a multi-targeting approach to ensure scale, to maximize performance through detailed analysis and optimizations. But essentially, that's everything we have in terms of the presentation here. So if you do have any questions, just let us know in the questions box, and we'll look to answer those now.
So I'll take over from here. Thank you, Megan and Chris. So we would like to now jump into the Q&A portion of the webinar and open up the floor to any questions you might have. Just a quick reminder, like Chris just mentioned, if you have any questions, please place them in the question box of the GoToWebinar panel on your right. I'm seeing that there are already several questions coming through. So just a heads up, if you're not able to get to yours today, not to worry, we'll follow up directly with you after the webinar. So the first question, how does StackAdapt support marketing compliance in ads for financial brands?
I can take that question. So there are a couple of ways around it. Our creative studio team, which we've mentioned a couple of times through the presentation, can build disclaimers and legal notices into the creatives so that they only display when a user hovers over them. This enables the ad not to be taken over completely by the disclaimers, but it also does adhere to all of the regulations that we need to adhere to.
Thank you, Megan. Another one that just came in is that, do you have audience segments based on topics or interest categories for finance?
I can take that one. So essentially, yes, there are a large range of different options there. So a lot of the targeting segments that I took you through in the targeting portion of the presentation do cover topics. I know that's kind of a vague answer, but we can look at third-party targeting. We can look at browsing targeting, which is a bit more flexible. We can literally create a custom browsing audience of whatever topic you want to reach for your clients. And then that's kind of more interest, but then topical is more of that PCAI solution that I took you through, reaching people in real time. So yeah, essentially we do have a few different options there.
Thank you, Chris. Another question is ABM targeting available via self-serve?
I can take that one then. So ABM targeting currently in EMEA is through our partner Bombora, which Chris made reference to. In the case where you want to tap into that, you would contact your StackAdapt representative to create that ABM audience and push them through to your StackAdapt account for use. In the US, we do have a self-serve ABM solution, which has recently been rolled out, and we hope to roll that in EMEA.
Thank you, Megan. So another question that we have is that, what channel would you say is the most effective for lower funnel tactics in the financial sector?
Yeah, I'll definitely take that one. So this I wouldn't even necessarily just relate specifically to the financial sector. Every kind of vertical, I would recommend display and native as our lower funnel tactics, where you'd want video, digital out of home, in-game, and even audio being that awareness upper funnel. Although it can get a bit confusing, whereas you can still use display and native for throughout the funnel, so upper, mid, and lower. Display and native are most effective I guess to answer the question specifically, for lower funnel.
Thank you, Chris. And we have one last question for you. Do you offer any solutions to avoid ad fraud for CTV?
I'll take that one as well. So I guess not even just CTV specifically, we take ad fraud quite seriously for all our channels, and we do approach it the same for all of them. We are strongly partnered with Moat to counter ad fraud, but then I guess for CTV more specifically, a lot of CTV campaigns operate through PMPs, so curated inventory lists, which do maximize our brand safety and minimize ad fraud there as well.
Thank you, Chris. That was a very interesting question. So amazing. Thank you so much once again, Megan and Chris. And that concludes today's webinar. And I would like to thank you all for attending today. We hope you find it both informative and insightful. Shortly, we'll be sending out a follow-up email with the recording to all registrants. Please don't hesitate to reach out with any other questions you may have. And again, thanks for joining us and enjoy the rest of your day.